Hi everyone and welcome to Inderes TV. Today we're going to talk about CapMan with Analyst Sauli Vilén. Welcome.
Thanks.
We're going to talk about the Q3 and it was slightly better than expected. What were the reasons behind this?
Well, in short, the management fees were a tad higher than we expected. There were two reasons behind it. First, the mid-star hotel transaction, what CapMan did in the first half of the year, the fee level, what CapMan receives from that capital is actually it seems to be higher than I originally expected. Mm-hmm. So that's one, and that's actually a really good thing. The mid-star transaction seems to be a really good transaction, and in that sense. And then secondly, on the CapMan Wealth, the wealth management business, they had a really strong quarter. There was I think that there was also some more of a transactional fees, which are not like a continuous fees. But yeah, but that in the wealth they had a really good quarter. So yeah, okay. And of course, since your cost base is fairly fixed, so when the top line is better, then obviously it flows fairly nicely to the bottom line.
To the bottom line as well, yeah. So you have said yourself that CapMan have three profit cylinders: the fee profit, the investment income, and the carried interest.
Yeah.
So how are these three cylinders working right now, if you would give an explanation?
Yeah. I think that three-cylinder is actually really good overview how this thing actually works. So in the management business, which is the most important thing, it's of course the core of the operation, and it's the most the value is basically based on there, of course. So the management business, the fee profit level, it's fairly low still, obviously, and in order to improve that significantly to the levels where CapMan should be, they need to grow. Clearly, they need to succeed in their fundraising. They need to grow the AUM to the next level. I guess we talk more about that in a minute. But yeah, so that's so. Then on the carried interest side, well, that cylinder is not working at all. Basically, at the moment, it's working super slow since of course the exit market is not frozen, but it's slow at least. And when you don't have exits, then you don't have the carried interest there. It's fairly simple. And of course there, when the exit market finally opens up, and then of course there should be a clear uptick on this, since CapMan's flagship funds have performed fairly well, what I have understood. Then finally on the investment income side, well, this is the cylinder, but it's actually working as it should be. It is delivering the results what it should, and what is the potential there. So yeah, so in that sense you can say in overall from the three cylinders the engine is actually running with maybe 1.5.
Okay, yeah, but that's half of it.
Yeah, half of it. Yeah. So there is clear room for improvement.
Yeah, and let's talk about the fee profit, because you said last time as well it's not working as it should, and you said it now as well. So what's the problem there?
Well,
and has there been any changes in the right direction?
Well, yes, there is some small changes to the right direction, but of course the slope is not what it should be. And I mean, the reason is purely that the CapMan's operational expense base is built for the larger operation, and they are ready to grow, so to speak, if you look at their operating expenses. And when they grow, then the fee profit should scale really nicely, actually. Mm-hmm. So it all comes down to sales, as we talked last time also. If the company succeeds in sales, then the fee profit will improve. It's fairly simple in the fund management business, to be honest, since the fee structure is fairly fixed. So yeah, but sales is the key here. No, in that sense, nothing has changed, and there is not like any structural issues in that sense. It's just that the CapMan has built the OPEX based for the larger operation, and of course, because they believe that they can grow significantly and they want to grow significantly from here.
Yeah. So what about the fundraising? CapMan now has 3 flagship funds raising capital at the same time, if I understood it correctly. And next year there will be 4. Is this, since I'm not an expert, is this a good or a bad thing? Or are they taking room from each other, or are they just creating synergies?
Well, if you think about the fundraising process, the heavy lifting is done by the teams themselves. These are the buyers are highly sophisticated. They are making a major investment. These are big decisions. These are not products that you can just sell through email or through some random salespeople. What the buyer actually does, it invests to the team. They believe that the team can execute the strategy. So in that sense, they want to see the team, the track record, etc. So the team does the heavy lifting there. So in that sense, all of the teams do their own work. Okay. But of course, CapMan has a lot of company level resources on the fund on the sales side, and of course those resources will be really stretched when you raise simultaneously 4 flagship funds. And in that sense, of course, it's not optimal to do everything at the same time. Of course, CapMan, in the perfect world, CapMan would want to do them as they tried. The original idea was that the two funds are already raising this year and doing the first closes this year, and then the next 2 comes 26. But the situation is what it is, and now you need to do this that you have the 4 funds at the same time there. I don't see it as a major issue. As I said, the teams do the heavy lifting. But of course, what it means is that the 26 will be kind of a make it or break it year for CapMan, since this is an area where you need to excel, you need to succeed here. So
so make it or break it.
Kind of dramatic, but in that sense, yes.
Yeah. So for several quarters, we have been talking about the market conditions, that they're tough and they're hard. But you actually wrote in a report that there you see some light in the end of the tunnel.
Yes.
So what are the biggest drivers for the brighter outlook?
Yes, just to remind viewers what the problem, so to speak, has been, is that the exit market has been very slow. In the 12 months ago, it was basically frozen. Yeah. And when the exit market is really slow, if you cannot do exits, you cannot return capital to your previous your investors. And when investors don't receive capital, they are reluctant to do new commitments, of course. Obviously because there is liquidity restrictions, etc., and the allocations might go too high on the certain asset class. So that was the problem. But now what has happened? Well, the IPO market in Europe is wide open, so to speak. The IPOs are actually the IPO market is well, you cannot say booming, but it's still wide open. Also, the transaction market overall on the real estate side and overall private equity side, it's improved significantly. And of course, the overall sentiment in the market has improved notably from for example, from the 6 months ago or so. Yeah. So in that sense, when the exit markets start to work again, then you can do exits, then you can return capital, and then new sales become much easier, of course. Yeah. So in that sense, the market situation has improved definitely. Yes.
Yeah, that's a good thing.
And it's not just the only some hunch that it's getting better. You can actually see from the data, or you can see the IPOs constantly flowing in, that it's actually working now. Yeah. Let's hope that lasts.
Yeah, let's hope this lasts. So what about valuation and recommendation?
Well, getting back to the 3 cylinders. Yeah. If all 3 cylinders are firing up at once, the stock is cheap. Yes. It is easy to say. But then again, if the cylinders are working like a half speed as it is now, the share is fairly valued, you could say. Yeah. There is not much upside there. So again, I'm getting back to the fundraising. If CapMan succeeds in the fundraising, then the fee profit will grow. It's not question that it will grow. It's just about basically the slope, but it will grow significantly. Then of course that means that carried interest will also flow in, of course, and then the investment income also will flow in, since that's kind of tied to the to the carry in that in a broad picture. So if CapMan succeed in the fundraising during the next, let's say, 24 months or so, the share, there should be actually a really good case for the share. Our recommendation is accumulate and not buy after what I just said. Yes. It is because, the fundraising goalpost has been postponed constantly here. I want to see clear evidence that the fundraising is actually working, that they actually can deliver on the fundraising on the scale they have told investors that they will. The first, like a milestone, you could say, will be actually in this year, in Q4, when they will do a first close on the new forest fund. It will give some insight, like what the market appetite for the products currently is. So we'll see. Yeah,
we'll see in Q4.
Yeah.
Thank you, Sauli, for all these comments. And if you want to know more about CapMan, please go to inderes.se. And if you want to have more questions to Sauli, you can find him on our forum. Thank you.
Thanks.